I'm Doug McKenzie.
And I'm John Ward.
And we're the co-hosts of the ABCs of IBC podcast.
Come join us as we share our unique perspective on the infinite banking concept as the creator, Nelson Nash, intended.
Welcome back, everybody.
Hey there, Doug. How are you?
I am doing all right, John. How about you?
Good. I'm good. I'm inside, and I think it's going to rain today.
I think it might already be raining.
Oh, geez. Maybe it's short-lived, though,
Yeah.
right? I think I only saw like 2 hours worth of rain.
Not terrible.
Yeah.
No.
So it's been a good balance this summer.
Yeah, post July and June where it rained an excessive amount. Yeah.
Okay.
Yeah, it's been interesting here in the Northeast for anyone that's not here. It's rained, I think, more in the last month or two than it has for this time frame, like in a long time, which is good because we were in a drought there for a long time.
Yeah. I love to see the streams flowing hard and all that kind of stuff. So I'm okay with the rain.
Good. Well, listen, we have a kind of a fun topic today that came about as a result of some conversations that John has had recently with people. So, we just wanted to touch on this because I think it's relevant to a large portion of our listener base and people that practice infinite banking. So we're going to talk about, whether or not accountants and CFPs understand whole life insurance and by, correlation, the infinite banking concept. And we think that this is relevant because in general, the people that practice the infinite banking concept tend to have more money and are more likely to have an accountant or a CFP.
Yep, I would agree with that.
Yeah.
This topic idea came up for me and ran it by you first to see your thoughts. And then it was the fact I got a call from one of my clients, and he had been talking to a business peer, for a while about infinite banking, and then this person said to him, months later, like, geez, I really need to figure out what you're doing, and so supposedly went off and read one of Brian Bloom's books and then went to his accountant, and I don't know exactly what they shared with the accountant, but the accountant came back and says, well, you're going to have to declare those loans that you took through the insurance company as income. And so my client says, I think we're going to need a little intervention with my peer, my friend. And I said, I don't know how much I can do, because I guess all I would do, and I would think you would do with this person, is say, well, you've taken loans in the past, right? Maybe a car or for the business, right? These guys all take loans. And did you ever have to declare those loans as income? I mean, to me, it would be that simple.
It's common sense.
Yeah, it would be that simple, but somehow the accountant, so I'll fast forward that. Then I was sharing this with my brother, who's a practitioner, an infinite banking practitioner too. And it's funny because he was in the middle of doing his taxes when I shared this with him. And he's like, geez, I just had that conversation with my accountant yesterday. And I said, hey, make sure that money flowing in and out of my bank statement is not, those big chunks are not income.
Yeah.
And then he says, those are loans. And the accountant says, you can take loans with these policies? And when I shared that,
it's funny because John was sharing this with me, and I'm like, and I've had similar experiences too. It's like, really? Because it's not some like new obscure product.
Yeah.
It's been around for a little while.
A little while.
And
longer than I have.
Yeah, longer than anybody on this planet has.
Yeah, there you go.
And you would think that professionals whose job it is to understand the tax code would understand that I think, right? I mean, but it is funny how misunderstood such a really simple, long-standing product is sometimes. And when you told me that, I've heard people misunderstand other aspects besides that, but to think that a loan is income is pretty it's like rudimentary stuff that,
Yeah.
like you said, no loans are ever classified as income.
Yeah, exactly. So, I mean, I think, in some ways, rightfully so, especially if you're a business owner, that you run a lot of things by your accountant. They're your professional partner, and because you deal with them, whether it be quarterly and paying taxes or annually or whatever way you're doing it, you've got an ongoing conversation with this person, and we are talking about the numbers of your life and in your business, your finances, the ins and outs, the cash flow. And so you feel like, hey, have you ever heard of this concept called infinite banking concept? And so you're going to run it by another sort of financial professional, right?
Ideally hoping to get affirmation.
Well, yeah, or to be like, yeah, there is something you missed, right? And this is where the gotcha is in this awesome product. Like, why isn't everybody doing it? That concept, like, well,
good point.
yeah, I found it for you, and here it is. And then they come back and they give you something. You're like, whoa, 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 you don't even understand the basics of what this is. So I guess you're really not my advisor for this. It doesn't mean you're not the advisor for taxes. And, a gentleman that I really respect in this industry, said to me early on, he says, accountants really are to help you stay within the tax code guidelines, make sure you pay the appropriate amount of taxes, hopefully make sure you don't get audited because you've done things right. And of course, they'll stand up for you.
Yeah.
But we only know what we know, as the saying goes, and they don't know this product. I mean, people think they know whole life. Very few people know about the infinite banking concept. So unless this professional, accountant, tax attorney, whatever, is really going to go and say, I'm going to brush aside all my feelings about life insurance, or my client is investigating this. I'm going to investigate it for myself, try to really understand it, and then provide some feedback, right? Unless they're going to do that because they're interested at that level, they're potentially going to miss a lot.
And you might get conflicting info. And remember that these people are human.
Yeah.
And they have the same human reaction that a lot of people have, that I know people listening, when they probably tell people about, hey, I'm doing IBC, I'm funding whole life policies, they probably go, well, that's a bad idea. You should be buying term and investing the difference,
Yeah.
And it's this, they're going to have, a lot of these people do have the same reaction of not understanding something, but saying that it's a bad idea.
Yep.
Or providing misleading info. And we wanted to bring this up because we were more than happy to talk to these people or to present very well established facts that they can look into. And again, this isn't like a he said, she said. It is established tax code. It's not even something to have a discussion about, but more than happy to back that. But just to make people aware that when they have other financial professionals that they're working with, there's a decent chance that those people are not going to understand what you're trying to accomplish. And you may need to educate them, or we can help to educate them if they're open to it.
Yeah.
I've had some staggering conversations, John, with mainly financial planners around this, where, and I don't know if it's a view that, we're taking dollars that could be going into, index funds that they manage or something like that. But
right.
I think it mainly comes down to they don't understand. And I've had people tell me, well, it's a bad idea because, when you die, you don't get paid the cash value. And I'm like, Oh boy. So
Yeah.
you don't understand how
We've
that
got an
works.
uphill climb here.
Yeah. Or to tell me that, it's a bad idea because they're not liquid and the policies aren't liquid. Well, just as an aside, I took a policy loan last week and I made the call on Friday and I got money in my bank account on Tuesday.
Yeah.
It's pretty liquid.
Pretty liquid.
Pretty liquid. So it's easy to kind of talk about these points, but we've found that there's an unending amount of very bad info out there that people latch onto,
Yeah.
unfortunately.
So before I forget these thoughts that are bouncing around in my head is, so this peer of my client, I said he supposedly read one of Brian Bloom's books, which the titles are, The Confessions of a CPA.
Mm-hmm.
So we're already starting with a guy who's a CPA who is also a whole life only life insurance agent, right? And he's written 3 books. We've talked about him on several podcasts. And, he saw, where there's new information, right? And it's helpful I think it would be great if your CPA not only knew his thing, the tax code and so on, but that he also understood the financial world and then this becomes another thing that he or she is aware of. And there's another IBC practitioner. I think he's on the West Coast. And he says, I'm a recovering CPA, and I don't think it's like to bash CPAs. It's really about, unless somebody, just like if you went to your a family member or a friend and say, hey, I'm looking at this thing called infinite banking, and it's whole
Sure.
life and all this, and what do you think? I mean, unless they're going to go run off and delve into it, so that they can find the holes, if there's holes in this, right? Then they're going to give you a lot of opinion, and a lot of their opinion is based off of opinions that they've heard.
It's conjecture.
Yeah, it's all conjecture. It's just... Well,
I would have done the same thing.
Yeah.
Like
me too.
2 years ago.
Me too.
Said, hey, one of my friends said, hey, should I try to capitalize a whole life system I would have said, it's stupid. You should
invest in...
go put a bunch of money in ETFs.
Yeah, like exactly.
And, I wouldn't have known what I was talking about because I don't understand that. I didn't understand whole life insurance as a product at all.
Right.
And what it could be used for.
But you thought you might. You might have thought you knew something.
And there's some phrase out there. It's like the most dangerous thing is not knowing, it's thinking that you know something when you don't. And just like being very dogmatic about it, and which is how most people get.
Yeah.
But Brian's books are great because he does come at it with the viewpoint of a CPA. And if you're a CPA and you truly understand whole life insurance and what you can do with it, you'd probably get pretty excited about it. And there are CPAs out there that do get it and then can make those recommendations to clients, because you're not going to find a more tax advantaged place really on the planet to park your money on. We've talked about this many times, but you can pay taxes once and never again.
Yeah. I mean, I don't know which one of his books says you might not, really love all the tax code and even love life insurance, but you got to love the tax benefits of life insurance.
Yep.
Something very paraphrased from, but that's coming from somebody who understands that there's nothing like this. There's nothing this advantageous when it comes to, as he says, tax exempt cash flow, especially in as Nelson says, your passive income days, which is when you're getting income for not doing anything actively.
So as an aside, I think we're going to do another episode about this, but what he does and I do think that our listeners should read his books. They're quick reads. He assigns numbers to things, so it helps people to visualize this. But he does a very good job of helping people to visualize and illustrate the value in all different facets of your life that you can get from whole life insurance. Not just the cost, but the value that you're going to get in terms of savings, other places that you're going to get that you wouldn't have gotten otherwise, and assigning numerical values to those. And I think most of our listeners would be pretty surprised when they read that book.
Yeah.
I was the first time that I read it.
Yeah. I mean, I bought a lot of these books, bought bulk amounts and give them out to people. If you want to reach out, I'll send you a copy.
Yeah.
But I just find it's pretty plain English. I love Nelson. I love his stories. But I feel like this is much more straightforward, simple language that people can understand. If they want to read, if they want to sit there and spend some time trying to understand it, right? You have to have that desire to want to. Otherwise, I have a stack of books on my bookshelves that I read like 5 pages, and I'm like, okay, I don't really want, So you have to want to, and if you do, it's laid out pretty well. That it just makes sense that this is the way to go. This is the foundation of your financial life, as I always say.
Yeah, totally agree. I mean, Nelson's book, Becoming Your Own Banker is all about actually infinite banking, right? Practicing that. And he does a really good job of illustrating whole life insurance as a product.
Yep.
And even talking about, hey, you want to get into rates of return, we'll get into that and look at, it again. I think most of our listeners would be pretty surprised at the money that they can accumulate and save over a lifetime by using one of these policies or multiple policies.
Yeah, and in implementing this concept in your life, it's we are going to touch upon it, I'm sure, in future episodes.
Yeah. So, and it's our listeners too. If you're working with a CFP or an accountant, it's nice to be able to educate people about this. That's a large reason why John and I wanted to, it's the main reason we wanted to do this podcast, is to help, reach people, but also to educate them about how this works, because there's not a lot of people doing that. It's not very well known. It's changed our lives dramatically. And, if any of our listeners are able to help their accountant or their CFP to understand this, they're then going to be able to help other people with that as well.
Oh, yeah. And I think that's ultimately what they should want, is for you to be as strong financially as you can be without all the risk. And because you're one of their clients. And so if you're still operating as a business owner, then they still have a client. And of course, they have more value to bring to you. So I look forward to having conversations with accountants and financial planners, just to have a conversation. It's not like I'm not on an attack or offense, and they don't need to be on defense. Maybe there's things that I don't understand. Mm-hmm. I want to stay in my lane, which is, I've found this in my own life to be hugely beneficial. This is, again, not just about, hey, I'm an infant banking practitioner and I'm going to push my wares, I'm going to talk about my thing, and I'm going to stay in this lane. No, I live this lane. I have my own policies on myself, and they're structured as infant banking policies. And it's made a big difference to have that comfort that I have, and to have access to a capital pool within days, like you just said, mm-hmm. with no questions asked, and then I have total control.
Easiest loan process ever.
Yeah, and I have total control over whether I pay it back and all that kind of stuff, all the stuff we've talked about.
Yep. Well said, John.
Okay. that was, I think we covered it.
Yeah.
Okay.
Let's wrap it.
All right. Thanks, everyone.
Have a good day.
Yeah, you too.
All right.
Thanks.
Talk to you
Bye.
soon, John. Bye.
Thank you for joining us for another episode of the ABCs of IBC.
If you enjoyed listening, please hit subscribe and leave us a 5-star review wherever you listen. It really helps. See you next week.
Bye.